If you're an active trader looking to increase the amount of money you trade with, I have urgent news. You can get $5,000 or more for your trading account. The hardest task an active trader has is to manage cash flow. Without using every technique available to earn a profit, you can quickly run out of funds to trade with. That's why Traders Accounting put together an eye-opening, easy-to-understand, 11-part video series about the business of trading. These videos cover what every successful trader needs to know, such as what business a serious trader like you needs, the best way to set up your trading business, wash sales and capital loss restrictions, business expenses you may not have thought of deducting, what mark-to-market is, and efficiently trading your own retirement money. These free videos show you how to get an IRS subsidy of $5,000 or more every year just by trading. It's easy to get our free videos, too. It's quick, easy, and safe, and there's no cost or obligation. Thank you, and we'll see you on the next page.
My name is Dan. I am an investor. I am also a trader. I'm also a saver. I like saving, and I'm also a blogger.
So, what is an investor? What is a trader? What is it that I do? Well, there is a confusion between those two terms, really. Because sometimes I'll hear people say things like, well, I'm going to invest with gold, or I'm going to invest with the agriculturals. In other words, like, I'm going to invest with corn, or I'm going to invest with soybeans, or I'm going to invest in copper, or things like that. You really can't invest with commodities. It's more of like a long-term position trade, because with trading, all you're looking for is the appreciation or depreciation of of whatever you're trading, right? You're not really investing with it. You're not looking for wealth creative mechanisms. Same thing with stock prices. People can trade stocks, but you can also invest with stocks. That's what I do as far as the equities or the stock market. I look for companies that basically I think are undervalued for one reason or another, and corporations that actually make something. They employ people, they build factories, and they make a product. Now, I use my own capital, which means basically I run my own money. I don't work for a hedge fund or for anyone else. I just work for myself. I'm a private guy. And as I run my own money, basically what I do as an investor is I look for a company that makes a product. Really what I'm looking for is wealth creative forces in the economy as a whole, right? I look where wealth is created. In other words, I look for a company that makes something, makes a product. They employ people, they build factories, they employ people, and they pay those people a salary, and they generate profits. Now, hopefully when I invest with their company, two things will happen. They'll continue to generate profits, and that's really what I'm interested in as an investor. I want to see those wealth creative forces continue, right? I want to see earnings, I want to see good earnings, I want to see good profits. And as that happens, one of the things that I would like to see happen is the stock price appreciates in value, right? In other words, it's that old adage, like we've talked about, buy low, sell high. And the other thing is, I look for companies to pay a dividend. In other words, will share with me a dividend like once a quarter, sometimes once a year, for investing with their company. That's pretty much what I do as an investor. Now, as a trader, I also trade, and that's something quite different. I'm interested in commodity futures trading. Now, what the service I provide basically in the commodity futures markets are, like I've got my coffee here, right? And companies that make coffee, they'll hedge themselves in the market. In other words, they don't know if the price of coffee is going to go up or down. Nobody does in the future. And so they sort of bet against their own revenue. so that if it rises in value, like coffee rises in value, they don't have to pass that on to the consumer, the people that actually buy the coffee, because they've sort of hedged their position in the commodity futures market. But they can't do that. They can't keep their costs low and hedge unless there's people like me that will basically pick up their risk for them. And that's what I basically do as a commodity futures trader. And I profit there from the, buy low, sell high, just basic trading, appreciation or depreciation. Now, I think sometimes people see me or see anyone that does what it is that I do, and they think, yeah, that's what I want to do. I want to be an investor and I want to be a trader. And I'm not so sure if it's as much that as it is they see this, right? They see a guy at home, and that's what they want. They want to be at home. They don't like being tied to Bob's schedule because Bob is their employer, and they don't like, just doing always what Bob says, and they want the freedom. Investing and trading, it's not difficult. Somebody who I once was sharing what I had learned with, he said, his name was Mike. He said, none of this is difficult. It's just there's a lot to know. So in addition to that, especially doing this on your own like I do. I don't work for anybody. I just run my own money. In addition to the career of investing and trading, it requires a tremendous amount of discipline.
There are some really, really early mornings, and that takes discipline to get out of the bed, because the market doesn't work according to my schedule. I have to be ready for the trade when the market's parameters are there, and the market will do that on its own time frame and its own schedule, not mine. And something else, especially working from home, is that I'm at home. I like being at home. I really like being at home. I've got my TV, I've got my computer, I've got, the internet, I can go running, I can go down to the parks. But when I have to work, I have to be disciplined enough to sit down and work. And yes, it's nice doing that from, my own couch and sort of relax, on my couch. The cats like to bug me and sit on my feet, but at the same time, you have to be disciplined enough to actually sit and work. And for some people, that's very difficult, especially if they've come from a job where they're always told, do this at this time and do this at this time. But see, the thing of it is no one's telling you that. You have to do it yourself. You have to sit down and do your work.
But it goes far, far beyond just having the discipline to sit down and do your work, even though you don't have a boss telling you to do that. It goes far, far beyond that, because this career really is very psychological in nature. Very, very psychological in nature. And this industry, which the first part isn't helped by the second part. The second part being this industry is filled with a lot of egos, right? And there's two things there. One, you'll have people that have a lot of ego, and they just can't make it go with the markets, but they still believe for some reason that they're just better at everybody else when it comes to trading or investing in the capital markets. And so they'll come up with very entertaining pieces, financial commentary. Believe it or not, they do try and make it entertaining, and it can be easy to listen to, but you got to have the discipline not to listen to it, because that stuff can really get in your head. It's sort of like an opponent who just sort of psychs out another opponent. You can't listen to the yahoos and the nonsense. It takes discipline to do that. It might be, some of their stuff might be a little funny and everything, but you got to keep that stuff out of your head. A second thing really is a lot of the attitude, especially in the Wall Street culture. I live in Michigan, but there is a culture to Wall Street, and these people have their nose just stuck so far in the air you just couldn't believe it. And again, that takes discipline not to listen to that nonsense, and that's really what it is. I'll give you a for example, right? I know quite a few traders, and they've got really nice setups. I try and keep mine real simple, out of the way, because there's times that I shouldn't be trading. I'll get to that in a bit. But they've got really nice setups, and in any industry, when traders get to know each other, just like any other industry, you have your friendly little jabs, right? That's normal. But I know one particular trader, right? He likes to flash up this one photograph of his trading cave and setup or whatever it is. And, he likes to perpetuate the myth that it has to look like something out of CSI, or that your trading platform needs to, look like something out of the NSA. I mean, just 52-inch plasma screens and screens over here and everything. And again, some traders have a really nice setup, and that's totally cool. But this guy, he'll always flash that one photograph, and then he'll make snide comments about the way other people choose to trade, because there's many different ways to trade. Or, their account size and what he purports is his account size. He'll make really sarcastic comments and biting comments about different analysts or any analysis of the market whatsoever. He's the one and only way to trade, and all of that stuff, it's nonsense. It's complete nonsense. What you need is something where you can get through the data pretty quickly, and it's quiet. That's what helps me. And other than that, it's just a data feed. That's all it is, right? But it's all psychological in nature, and that stuff can get in your head. It really, really can. You got to just have the discipline to just sort of, I think as one trader put it, just mind your own business. Just do your thing. Don't get angry. Don't get mad. Don't get furious. Just mind your own business. Do your thing. Which relates to something else. Sometimes some things about the market seem to be contradictory. Like I'll talk about having the discipline to sit down and do your work, but there's sometimes that you shouldn't be trading at all. But that takes a psychological discipline in order to sort of keep an eye on your own mental outlook, right? Now, when you should be working, you should be working. But let's say you hit a grand slam, and I mean just a grand slam in the markets, and your account goes up by quite a bit. Just tremendous return, right? That's going to obviously affect you psychologically. You have to have the discipline to turn the monitors off and walk away for a while so that you don't give every dime of it straight back to the markets. It takes discipline after you took a lot of money out of the markets to not want to do it again. It takes discipline. Discipline really is the life of an investor and trader. Away from the desk. It has to be. It's just part of trading for a living.